Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 6th of September. Starting with the FTSE 100, where the situation resolved rather better than maybe was expected 24 hours ago. So we tested that two-year uptrend line there around the 71, well, call it 7200, and managed to get within a whisker of the 50-day moving average around 73.36. So far, we peaked up just below the 50-day line, but I suppose the message at the moment really is that any dips towards 7,200 currently regarded as dips to buy into. End of day close above the 50-day line could take us on to 75.50 or even 7,600 if this is the end of the recent sell-off. And the other thing is to note that we actually bounced off RSI 30, the oversold area, just actually below RSI 30. And that has in recent months and years been the dipped or the place to by the FTSE 100 at. So we had that in November last year, a couple of times back in February and March this year, and then most recently back in June as well. So that's pretty reliable on the RSI, or in terms of using the RSI as a potential entry. Below 7,200 or 7,180 on a sustained basis, end of day close, let's say, and we could risk getting down to the 7,000 zone. But at the moment, we seem to have managed to dodge that particular bullet. Onto Bitcoin, and here the agony continues, but it's not much better than that. Sideways price action, which I suppose is at least almost like no news is bad news there, or good news. Here we've got a situation where we broke down below the 50-day moving average in the 19th of last month, and since then we've been below the 50-day line, currently around 22,200. It sort of feels like we are ready to test early July support around 19,000, but market really in neutral mode. It's very difficult to get a handle on exactly what's going to happen. What is the most likely thing to happen, though, is that we are going to have a repeat of April-May. So after breaking below the 50-day moving average as we did in the middle of April, then struggling below it, and then an acceleration to the downside. So a break of 19,000 could give us 15,000 or below if that nightmare scenario pans out. And obviously we've been in the same kind of pattern there since November in terms of the breakdowns, then mild rallies, and then a fresh breakdown below the 50-day moving average. Onto the stocks of the day, starting off with Contango, which made the right noises today. Already broken that line of resistance there from February and above the 50-day moving average around 6.25. Looking for the shares to head up to 10 pence, maybe as soon as the end of next month. A big picture target, maybe by the end of the year, up to 12 pence, which is the top of that September 2021 broadening triangle. But the key here is to hold above the 6 pence area and the 50-day moving average. Moving on to Canadian overseas, which I know has its quite ardent fans here. The idea that we were due a bit of a rally back towards the old support area, which was around 16 pence, seems to have come to pass. We're just now near the 50-day moving average at 16 pence. We'd like to see an end-of-day close above the 50-day line to give us a new leg higher towards the low to mid-20s, best case scenario target up to 25 by the end of next month, if we can get a quick clearance of the 50-day line this week. The other point to note is that we had lower lows for August, September, or at least August, but the RSI remained firm, or at least remained flat, so that's bullish divergence, and that explains the latest recovery for the shares. This stage, only really back below the initial September support around 13 pence, questioning a recovery for Canadian. Onto a stock which is probably my favourite at the moment, just because it's behaved itself. First thing it did was head up to 35 pence, which was the initial target we had when the shares were around 25 pence. Finding support there at 35, but the next target was then up to 50, and we've done that as well. And today we can sort of upgrade the whole thing, so above 50 on an end-of-day close basis. And we're looking up towards the top of the that very steep-looking July rising trend channel. I suppose 90 pence looks a bit optimistic at the moment, but that could be seen as soon as the end of next month at the current rate of progress. I'm just trying to get the sort of the chart into the right place, but above 50, looking for 90 by the end of next month as a best case scenario. I suppose most likely is that we would peak in the 50s somewhere and then have time to cool off before a new leg to the upside. But so far looking very solid indeed, with that typical step fashion, so up and then a sideways shuffle, then up and sideways again. So pretty strong price action for Cleantech, suggesting a major re-rate is still ongoing. On to first class metals, which I think is the first time I've looked at the chart here. Here we've got a what looks like the start of a rising trend channel from back in the end of July. Floor of the channel here around 9.3 pence. Above that, looking for 12 pence. Maybe by the end of this month. Not much of a target there, but just looks as though the initial churn there for the shares has finally worked its way out of the system, and we're ready to move higher. On to Igas, which to paraphrase a quote from the weekend, we had Angus looking to do an Igas, but obviously Igas has been the best stock at doing an Igas over the recent past. Story here began in the mid-30s with the break of the 50-day moving average, and then the break of that April resistance line there around 37. It's been up and away ever since, almost. This looks like actually a mid-move consolidation, so we do have potential technical backing for a move up to £1.20 if we can hold above the low to mid 80s in the interim. The old high there, the initial August high there, 89. So ideally we hold above that with a bit of wiggle room, 85 to 89, that kind of thing. Above that we could go for 120 as soon as the end of this month for Igas. Moving along to Orosur, and here you can see that we've very happily been able to break the initial target here, which was around 15 pence. Above 15 pence, we're looking for 20, which was the more ambitious target at the top of that 2021 broadening triangle. And we could see 21 pence, hopefully sometime during this month, while we hold above the initial September peak around 14.5 pence. On to a stock which delivered its decent update today, Poolbeg Pharma. And it looks as though finally, after sort of 2 or 3 months of consolidation, we're going to have a move which means that the shares are holding above the 50-day moving average at around 4 3/4. Initial target here up to the 200-day moving average around 6.5 pence, which I think is a reasonable target for later this month. Best case scenario target maybe by the end of next month up to 8 pence, which is the top of that broadening triangle from back in June. But the recovery here certainly looks to be in place while we're above 4.5 pence for Poolbeg. In the sort of the holy alliance of Igas, Angus and Prospex in terms of the recent outperformers, we've got Prospex now, and nice V-shaped bull flag here, looking for 8 pence over the next, I suppose, couple of weeks, something like that, while we hold above recent support around 5 1/4. Big picture target here, which maybe is for the end of the year or maybe after that, but up to 14 pence, which is an October 2021 resistance line projection. So best case scenario here by the end of 2022 up to 14. Otherwise, just let's look for 8 pence while we're above around the 5 pence zone. Now, the stock where I'm upgrading the upside is Union Jack. We were looking for 40 pence at the top of a rising trend channel from back in October, but break of 40 pence could give us a little bit more up to the top of that rising trend channel from this time last year as high as 48 pence. And maybe, if we're lucky, we'll see that by the end of this month. Very smooth progression there, so looking rather good for a Union Jack at the moment. We've got both the 50 and 200-day moving averages both rising well at the moment in parallel. On to UCOG, which even this has started to improve as well. So apart from any potential cash calls, which all seem to be on the cards when we see the shares move, most of the moves here, as you can see, have been 2 or 3 day wonders in the past. So we're on day 2 at the moment. Let's see if we can manage 3 days in a row. It's like 3 fine days in a thunderstorm, English weather. But we broke that line of resistance there from June around 0.08. At the end of last month, and we've delivered reasonably well, so we're probably looking for 0.12 as a best case scenario, which has been achieved. Even better scenario is that by the end of Next month we head up to 0.18 at the top of that broadening triangle from November, and that's valid while we hold above 0.1 pence, the 50-day moving average. Finishing off with ValiRx, which had a recent placing and seems to be recovering from that now. The shares were down towards the 10 pence area, which I think was the placing price, but we're well above that now, looking to break the line of resistance from October. Around 13.5 pence above that, there's a chance of the shares heading back to former March support on the way down around the 20 pence area, maybe as soon as the end of this month. So that's the perhaps rather punchy call there for ValiRx at the moment, and the upside value, at least while we're above the 11 pence area. So above 11, looking for 20 on ValiRx. That's it from me today. More updates tomorrow.